When I first saw the news about Empire Sushi's IPO, I was thinking like, okay, another IPO. IPO fatigue is real. But as I looked through their prospectus, my eyes widened. This is a chain that sells sushi for cheaper than 2 ringgit per piece, yet it raked in 235.6 million ringgit in revenue in FY 2025. And not only that, its profit has been growing fast, more than 2.5 times from 14.6 million in 2023 to 37.9 million in 2025. How on earth does a humble grab-and-go sushi kiosk make that kind of money? Today, we are going to deep dive into Empire Sushi's business model, its growth plan, and the details of its upcoming IPO. By the end of this, you should have a clear idea whether this is a business worth biting into when its IPO shares hit the market. Every big business starts with a vision. For Empire Sushi, that vision came from its founders, Nicole Lim and Jordan Tan, back around 2010. Sushi in Malaysia was generally seen as a premium Japanese cuisine, something you would splurge on at a nice restaurant. Nicole and Jordan set out to make sushi as an affordable food for every Malaysian. In other words, they wanted to bring premium sushi to the masses at everyday prices. This became the brand's tagline and ethos: premium sushi for everyone. How did they make sushi both premium and affordable? By creatively localizing it. Traditional sushi is all about expensive fresh seafood and masterful slicing skills. Empire Sushi took a different approach. They introduced local flavors and sauces into their sushi, literally calling it truly Malaysia sushi. They use local spices to create their own sauces and mix Malaysian taste preferences into the sushi lineup. For example, you might find a dash of mayo or a local twist in their rolls. Essentially, they aren't purists about sushi, they are innovators. This means they can use more cost-effective ingredients. Most of their sushi is fully cooked, not high-cost raw fish, while still delivering on taste and quality that Malaysians love. They also reimagine how sushi is sold. Instead of the typical dine-in sushi restaurant, Empire Sushi is known for its grab-and-go kiosk. They started by selling sushi in single pieces, not the usual pairs, at very affordable prices. Think 1 ringgit or 2 ringgit per piece, so you can mix and match a whole variety on a budget. They resize the sushi into bite-sized portions, perfect for snacking on the move. This pick and mix concept was quite new. It gave customers the freedom to try many different flavors in one meal, and it was fast. Just pick your sushi on the display, pay, go. No sit-downs, no waiters, no lengthy meals. This model hit a sweet spot. Busy office workers, students, and shoppers could grab a quick, tasty bite of sushi just like they'll grab a donut or sandwich. Of course, breaking into the food business wasn't without challenges. Let's be real, Malaysia is saturated with Japanese restaurants of all kinds, from high-end omakase bars to conveyor belt chains. Empire Sushi had to find a niche that others ignore. Traditional sushi outlets often focus on dine-in experience, variety of sashimi, and premium pricing. On the other hand, supermarkets sold pre-packed sushi, but without a specialized brand experience. Empire Sushi positioned itself in between, offering restaurant-style variety and quality, but with fast food convenience and pricing. They literally branded their sushi as Kueh Jepun, implying it's a local snack for everyone, anytime. By being in high traffic locations like malls, transit hubs, and hypermarkets, and by having bright eye-catching kiosks with sushi displayed in chilled glass counters, they attracted curious customers in droves. The concept of sushi for anyone, anytime, anywhere was their gap in the market, and they filled it brilliantly. I remember when opening a brokerage account felt like doing SPM all over again. Pages of forms, signatures everywhere, and sometimes you even had to mail them in. That old school hassle, totally unnecessary now. With CGS International Securities Malaysia, some of these application processes are now online, fast and paper-free. CGS isn't just any broker. They are a trusted professional investment house with a global presence, backed by award-winning research and trusted by millions of investors worldwide. Basically, this is where beginners and pros go when they want to level up their investing game. And now, they have got something pretty awesome going on. From now until 31st of December 2025, if you're among the first 500 people to open a new CGS trading account and trade at least 1,000 ringgit worth of shares, you will get 100 SP Setia shares credited straight into your account after the campaign ends. Here's all you need to do. Step 1. Click the link in the description and open your CGS trading account. Fully online, no paperwork, no need to travel. Step 2. Fund your account and make one trade worth 1,000 ringgit or more. That's it. If you're one of the 500 lucky ones, CGS will reward you with 100 SP Setia shares. Free shares just for getting started. Let's be honest, opportunities like this don't come often. You get to start your investing journey with one of Malaysia's top broker houses and walk away with free SP Setia shares. So don't wait until all 500 slots are all gone. Click the link in the description, open your CGS trading account, and start trading today. Empire Sushi's business model is essentially a volume game. By selling lots of inexpensive sushi prizes, they accumulate high revenue. Over 80% of the group's revenue comes from the grab-and-go sushi outlets. The remaining comes from the newer quick dine-in outlets. These are more like small restaurants, some with conveyor belts, but they are a minority of the business. Only 15 out of 132 outlets are dine-ins as of 2025. So, most of the money is made one piece of sushi at a time through high foot traffic and quick turnover. And one piece at a time, those pieces add up. In FY 2025, Empire Sushi's revenue hit 235.6 million ringgit. That's a lot of 2 ringgit sushi being sold. To put it in perspective, revenue was 137.1 million in 2023, then 184.8 million in 2024. They have been growing roughly 30 to 35% per year. Very impressive for an F&B retail business. Profit after tax grew even faster, from 14.6 million to 37.9 million in that period, as the business benefited from economies of scale. That means centralized ingredient sourcing, efficient operation, brand recognition, etc. etc. And what enabled this growth? A combination of rapid outlet expansion and same-store sales growth. Let's talk about the outlets first. Empire Sushi started with one tiny kiosk in a Penang hypermarket. By 2014, they opened their first fully owned outlet in KL. Fast forward to 2020, they have grown to 39 outlets nationwide. And as of the latest count in 2025, they have 132 outlets across Malaysia. This includes 117 grab-and-go kiosks and 15 quick dine-in shops. The founders basically proved the concept in one mall, then rapidly cloned it across the country over the last decade. Each outlet can be quite profitable because the business keeps costs low. They're usually set up in rented spaces, often small kiosks, not huge restaurant. There's minimal seating as well, or sometimes not even one seat, so they don't need large floor space. They also prepare much of the food in advance and keep it in display chillers, which means they can serve customers extremely fast without a lot of chef on site. One of their competitive strengths is maintaining strict SOPs across all outlets to ensure consistency. Whether you buy a salmon sushi in Penang or Johor, it should taste the same. This consistency and efficiency helps them scale up without losing quality. It's also worth noting that Empire Sushi owns and operates all its outlets directly. They didn't franchise out, or at least not yet. That means all the revenue from each store flows into the company and not shared with franchisees. But it also means they have to finance each new store themselves. We'll touch on financing in a bit, but this decision to stay owner-operated likely helped them keep quality control tight and the brand experience consistent. So, what's next for Empire Sushi? In one word, expansion. They are not slowing down. In fact, they are gearing up for their biggest expansion blitz yet. According to their draft prospectus, the group plans to use the IPO funds to open 56 new Empire Sushi outlets between 2027 and 2029. Yes, 56 outlets in about 3 years. To put that in context, they have 132 outlets now, so they're aiming for roughly 188 outlets by 2029 if all goes to plan. That's a huge 40% increase in store count. These new outlets will be a mix of the classic grab-and-go kiosks and more quick dine-in format stores. The idea is to penetrate deeper into all regions of Malaysia, likely filling in gaps in smaller cities or new malls, and perhaps even eyeing neighbouring countries eventually, since the founders have hinted at Southeast Asia's ambitions. But for now, the IPO proceeds are earmarked for Malaysian expansion to solidify their domination of the local sushi on the go market. Now, how much does it cost to open one single Empire Sushi outlet? The company hasn't stated an exact figure per outlet, but we can estimate. In the past few years, they have been spending on capex to roll out new outlets. For example, in 2024, they spent about 10.7 million ringgit on capex, mainly for purchase of kitchen equipment and renovation works to open new sushi outlets. That year likely saw a big chunk of new stores opening. In FY 2025, capex was about 7.8 million ringgit for new outlets and equipment. This gives us a ballpark. Each outlet, depending on size, might cost a few 100,000 ringgit to set up. With the IPO, they will have much more capital available, potentially tens of millions of ringgit, to deploy into all these new outlets. If we assume, hypothetically, they raise, say, 80 to 100 million ringgit from the new shares, 60% of that is about 50 to 60 million for new outlets. Divide that by 56 outlets and you're looking at an average of around 900,000 to 1 million ringgit per outlet budgeted. This suggests they might be considering slightly bigger or more well-furnished outlets. Perhaps more quick dine-in stores which cost more than a simple kiosk. Or just by giving themselves a comfortable buffer. Regardless, they will be adequately funded to execute this expansion without straining their finances. The question is, are these new outlets likely to earn back more than they cost? Given Empire Sushi's track record, the answer is likely to be a yes. You see, the average revenue per outlet currently is roughly 1.8 million ringgit per outlet annually based on the 132 outlets they have, making 235.6 million last year. Of course, that's an average. Some high traffic mall kiosks might do more, some smaller ones less. But if a new outlet costs around 800,000 to 1 million ringgit to set up and can pull in maybe say 1 or 2 million ringgit in sales each year, it will pay back its investment pretty fast, especially with Empire Sushi's gross margin of around 40%. The company's profit margins have been improving too, given the benefit of economies of scales as they grow. This means they are squeezing more profit out of each ringgit of sales now than before, which bodes well for new outlets' profitability. So, if they maintain discipline, each new store could further boost the company's efficiency and profitability. It's the right recipe for a company that's scaling well. In Empire Sushi's case, you can see efficiency in action. With relatively modest capex, they've built a chain that spins off a lot of cash. We can see that from the 57 million ringgit net cash from operations they generated in FY 2025 alone. That cash can then fund even more outlets in a vicious cycle. Empire Sushi is a cash business at its core. Customers pay on the spot for sushi, and there's no waiting for months to collect receivables. Yet, if you look at the numbers, the company has been expanding via debt. Over the last 3 years, its gearing ratio has held steady at around 0.3 times. Now, what does that mean? A gearing ratio of 0.3 times basically tells us that for every ringgit of equity, Empire Sushi had about 30 cents of borrowings. It's not a worrying level at all. In fact, many F&B companies run at a higher gearing. But it does show that Empire Sushi leaned on external financing to fuel its rapid expansion from 1 kiosk to 132 outlets today. Setting up a new outlet requires big upfront costs from equipment, renovation, rental deposits, and the company chose to fund part of the growth with borrowings. So, is 0.3 times gearing healthy? Well, I think it's okay. Moderate. It shows the company hasn't over-leveraged itself, but it also means they have to bear some interest expenses along the way. Going forward, this is where the IPO changes the game. With fresh equity funding coming in, Empire Sushi will have more firepower to keep expanding without relying much on debt. That means less pressure from interest costs, stronger cash flow, and more flexibility to deploy capital directly into opening new outlets. Now, on to the IPO specifics. Empire Premium Food Berhad, the holding company of Empire Sushi, is heading for a listing on Bursa Malaysia's main market. Of the 363 million shares on offer, as many as 293 million are going to institutional and Bumiputra investors approved by MITI. That's the portion for big funds, banks, pension funds, and selected investors. Only 70 million shares. or around 6.4% of the company, are for the retail offering. Within that, 55 million are what you and I can try to apply for, and 15 million shares are reserved for eligible directors, employees, and persons connected to the group. This means that there are relatively crumbs left for you and me, the general public. 55 million shares for the public may sound like a lot, but interest in this IPO could be high. It's a popular consumer brand with strong growth, and usually IPOs in Malaysia often get oversubscribed. So the likelihood of getting an IPO allocation is very small. If you're thinking of subscribing to this IPO, be mentally prepared that you might not get it. In any case, don't get FOMO just because Empire Sushi is a hot IPO. We have now learned about the business model, the growth prospects, and the financials. If you're confident in its long-term story, you can afford to be rational with your entry point. Whether you get it at the IPO price or later, what matters is where the company hits in 5 to 10 years' time, not the first 5 days of trading. And this is what I've learned from the Empire Sushi IPO story. Empire Sushi founded a golden niche by making sushi affordable, fast, and catered to local tastes. It turned a premium cuisine into an everyday delight. This savvy positioning helped it grow from a single kiosk to 132 outlets nationwide with 235.6 million ringgit revenue, proving that premium sushi for everyone is more than just a tagline, it's a profitable reality. The company is on a strong growth trajectory. Empire Sushi plans to add 56 new outlets by 2029 using the IPO funds, nearly a 40% increase in footprint. Its financial performance has been growing as well, 3-year profit CAGR of over 50%, and it's achieving better efficiency and return on capital as it scales further. With most IPO proceeds earmarked for expansion, the business is set to get even bigger. The owners have kept debt modest, around 0.3 times gearing, so the growth is being managed sustainably. Now, thank you for watching and good luck if you decide to go for the Empire Sushi IPO. If you enjoyed the video and want to hear more insightful breakdowns of businesses, do subscribe to the channel and I see you in the next one.